Hello, everybody. All right, just getting everything ready. Sorry, guys. Give me just a second here. Um, let's do this. Hello, hello. You give people a few more minutes to show up here. Hey, Bach. Make sure you guys give this a ton of likes and subscribe 3 times. I'm just playing. I'm going on like no sleep here and no food and nothing. What's up, NBA? But this is super, super exciting stuff. Um, all right, that should be long enough. I'm going to get into it here. Um, so basically, first things first, we're going to hide these candles. So on TradingView, you select your ticker symbol, and right up here, this little eye, just click it, and your um, candlesticks will be gone. And then we should have discussed this, but on your so from your indicators, I'm just using the session volume. So if you search for volume profile, if you can spell, um, and you'll find session volume in there, or you can actually just search for session volume. But so anyway, that's the one I'm using. Click on the settings, and I change my row size to 200 and my area volume to 100. That just gives you a better idea because it shows more of these little candlesticks, gives you a better idea. Um, anyway, we're going to switch to the 1 hour, or sorry, the 1 day. Um, and so, um, just really quick, if we look here, we have a B pattern. This is weakness. And here we have a P pattern. That's going to be strength. Um, and so basically all we're going to do is, so I'm doing this no candlesticks. Um, so I don't really know. I mean, you can tell by looking at the volume profile, but I don't know exactly what the candlesticks are doing. I know where most of the volume's trading for the day or what have you, and that's about it. Um, and so, like Shorty was saying, these are only going to be good for about 30 days. The POCs and the Virgin POCs, um, and TradingView shows I want to say 6 weeks. Um, So just to give you guys an idea. But so, yeah, so we'll start way over here. Um, Sorry, just trying to get this positioned on the screen here so you guys can see it. All right. So if you understand volume profile, and if you don't, that's okay. Most of our volume is traded up here. This entire blue area is going to be the value area. We're not going to be using the whole value area for finding our supply and demand zones. We're just going to be using the highest volume area for finding our supply and demand zones. And then, our VPOCs and POCs are drawn in for us. Um, and so what we're going to do is use the rectangle. I'm going to choose this area here where I see the highest volume. Drag this down here. Just select all this volume there. Perfect. And then your VPOCs and POCs don't have to be perfect, but because it's a range. It's not an exact. Um, but so this one happens to be like spot on, which is good if you can get it spot on. And so what I'm going to do here is I'm just going to label it. And then you'll see over here it says VPOC. So that way, when I'm looking at a bigger chart, I'll be able to see clearly that this is, whether it's a virgin point of control or if it's a point of control. And then also, I'm going to change this to green. And then just so you guys can see, if you're interested, I have the opacity at 30%. If you're trying to mimic my settings. So this one's pretty far back, October 25th. But I plotted that because we're getting close to it. And we don't really have another reference point this low. So if we look at the big picture here, we're getting fairly close here. You can tell, just from the volume profile that this is a virgin point of control. It doesn't look like any candles have crossed down over this. But when we turn the candles on, I might actually end up being wrong. And okay, so I just read what you said, Ryan. I'll get to you in just a second. Again, I won't know 100% for certain until I turn on the candlesticks, but I'm pretty sure that this is a virgin POC because I don't think any candlesticks have crossed below this point. So that's the difference between a virgin point of control and a point of control. So like if we look here at this POC, and I'll throw a line on there. Actually, give me 1 second, guys. I'll be right. All right, sorry about that. I can turn the volume up. Let me know if that helps out. So anyway, if I plot this line here, just as an example, that would be a point of control. And I'll get my mic closer. Let me know, Cyber, if that helps out. So this is a point of control because it's crossed back through this level. So this is no longer a virgin point of control because it has been touched by candlesticks. Whereas this one here has not been touched as far as I can tell. So this one's going to be a virgin point of control. Okay. So next, we're just going to start looking for key levels. So for example, here, we'll take this area. And, you know, guys, this is not like a, it's not perfect. It's not going to be, you know, it's not a science. This is more of an art, finding these plot areas on charts. And so, you know, it's not going to be perfect. But so I look for the area where I see like the most volume, and I select that. And most of the time, that works out. And so here we're going to do our, again, this is going to be a VPOC. I'm going to throw a label on there. And our next area is not going to be a VPOC, but it's going to be this area here. And what you can also do is you can click these and clone it, and then, whoa, just drag that to your new area. Trying to see how much I want to include here. I think I'm going to go with this area here. And then I can also clone this one. Drag it up here. And doing this, you know, you should be able to get through charts fairly quickly. Our next area is going to be up here. This one I'm going to choose a smaller area because we have, you know, the volume is pretty spread out on the day. So I'm not going to take anything that's at this level here. I'm going to stay with the volume that's up here. Hopefully that makes sense to you guys. So again, I'm going to make a clone of this one. And also, when you're doing this, you know, as zones become irrelevant, make sure you go through and delete them, because you will start getting, you know, older stuff on your charts that are no longer relevant, and you're not going to want those on your charts anymore. So far, we have 4 supply zones, right? And up here, we're going to have a demand zone. Yeah. And I'm going to make this one red. So I'm just going to choose the large volume area of this day. And we're going to have another VPOC up here. So from there, this chart is done. We're done with QQQ, other than, going in and looking at our TA. But for that, we're going to want to turn on our candlesticks. I'm going to turn off the volume profile here. We'll throw the candlesticks back on. And we're going to switch over to the 30-minute. And so, yeah, I mean, this looks really good. You can see here, I mean, we're not trading on the 30-minute, but, like this, the body of the candle closed with inside the range. Here we actually closed outside. But then, like, as far as retesting, we closed inside the range. Here where we finally broke through and retested, we see downside. So anyway, it should be, you guys should be able to see pretty clearly here. Looks like we were in a downtrend. Let's take a look. So from here, right here, when we cross out of this, sorry. I mean, so you can see, Ryan, I'm not plotting every single day. I'm plotting the ones that look, let me turn the volume profile back on. I'm plotting the ones that are relevant, at least as far as I'm concerned. Turn off the candles again. So, I mean, here, I'm not going to plot that. I mean, I would just have one big, if I plotted every single one, I would just have one big green blob with a red line at the top on my screen. You could probably argue that I should probably put one in this range here. And actually, I think that's a good idea. So let's do that really quick. It's going to be a smaller one, but I think we definitely need one in that range there. Sorry, it's weird. I was doing this last night on mobile, and doing it on my desktop is completely different. So again, I'm just going to get the larger area there. And then, so this one, we're actually going to have a POC, not a virgin POC. Let's see. Suman, October 26th. Already touched the POC of the 25th. Oh, you're right. Yes, you are right. So this is going to be a POC. Sorry, I didn't catch that. I was looking over here and not here. But so yes, that is a POC. And that's just based on volume profile. Even, with volume profile, it still could have touched here, and we just can't see it until we actually turn on the candlesticks. So how to draw the zones? So I'm choosing the area with the highest volume. I think this here is a really good example. If I zoom in on this area, you should be able to see pretty clearly, the volume profile, the value area is from 391.74 all the way up to 401.18. And we've just selected this area here where we have this big volume spike, right? This is the largest area of buying and selling taking place here. Okay, hopefully that makes sense. And if you look at all of the supply and demand zones, it's just going to be the area where it has the largest amount of volume. And again, this is not an exact science. It's an art. And if you ask, 10 different traders to draw supply and demand zones, probably every single person's chart will look different. They'll be similar, but they'll be different. So it's not like something definitive where I can give you a definitive answer. This is just something you do and you practice, and as you do it more, you'll get better and better and better. Anyway, so we're going to go back to the 30-minute here, and we are going to turn off our volume profile. We're going to turn our candlesticks back on, and yeah. So there we have it. Actually, if I go, sorry, let me turn off my candlesticks again, and talk about volume profile. The reason that this stuff is important, actually, looking now, this zone might be too small. Let me see. So, Rick, I covered that at the beginning. It's just indicators. I'm using session volume. So if you just search for session volume, or if you go to volume profile here, you'll find session volume. So built-ins, volume profile, session volume, this will come up. And then to turn off the candlesticks, you just push this eyeball here. Yeah, actually, I made this zone way too small. I don't know why I did that, but we're going to extend this one out here. We definitely want to include all this volume here. Okay. So you want to think about the psychology of what's happening. Think about yourself. Like obviously if we bought options here and it went way down here, we would have sold a long time ago. You're not going to wait until you're down, 100% on your trade, or I hope you don't. But if you were to buy shares here and it goes all the way down, from 403 to 377, what are you going to do as soon as we get back to this area? You're going to start selling. You're going to be like, oh, finally, I'm break even. Let me get out of this trade and put my money into another trade. So psychologically, any of these, that's why POCs and virgin POCs act as support and resistance. Is people see them as buying areas and selling areas. Like if you get in the trade here, and you see downside and it bounces back up, as soon as it gets here, you're like, oh God, great, I'm out. Break even is better than red. And so then you'll end up seeing bounces there. If we turn the candles back on, and go down to like a 5-minute chart. Let me turn off this volume profile. These should start to see trades here. Technically here, it's pretty close, touched. Could take puts. You wouldn't have this area here because, this is a new supply zone from this day, November 30th. But, yeah, good trade here. And then same here. I mean, you could draw in these supply zones as the volume profile is forming. But when we break here, good trade, comes down to the bottom here. This would be a fake out, I think. Yeah, that would be a fake out unless actually, let's see. 94 to 95. You'd probably take a trim in there somewhere with your fib levels. Puts would play here. And of course, in this range, like Shorty always says, you want to use your, you still want to use your technical analysis. And so here, there's several areas where you can take the trade. You can take the trade when you break this VPOC here. You can take the trade when you break out of the supply zone, or you could take the trade when you break through this area it's been bouncing in. So this price line here. But this is not like the most ideal chart. But so just an idea of how it would look. Let's look at SPY, because I know those supply and demand zones played out today. And if we throw on, I wonder if we can see it still. Our orbs. Yeah. So our orbs wouldn't have drawn in until 30 minutes into the market. What? Am I on the wrong day? What's going on? Here we go. Oh, I remember where I am now. Sorry. So I actually said SPY above 453.75, I want to say it was. And as you can see, we opened red, came down, tested that level. Next candle's green, retest, boom, all the way up. This would actually, like per the fibs, this would be 2 trims. But so perfect trade here based on those supply and demand zones. I think that's really going to be it, guys, unless you have questions. That's really the basics of how you draw supply and demand zones without candlesticks. Oh, sorry, Rick. I'm reading about your YouTube script. I mean, I'm using so like I said, this is a built-in indicator on, it's a built-in indicator from TradingView. And so, I mean, as far as I know, these POCs should be spot on. They shouldn't be off. I don't know why the script from YouTube would have the POCs off by a point. I guess I didn't cover this as well. Excuse me. You're going to be using these supply and demand zones. You're going to be using these supply and demand zones as support and resistance areas, areas to enter trades when we break out or below, and areas to trim trades when you cross into these areas. You're going to expect, you're really going to be expecting a rejection closer to the POCs and the virgin POCs. But, just like everything with stocks, that's not 100%. Here we have a pretty good, rejection right in that level. But again, never going to be 100%. And this is something, I'm just going to talk about this. I haven't tested it, so this is not like a definitive thing, but I think if we go with 15-minute candlesticks, and again, I need to back test this, and we're like above a supply zone, you can probably take swings overnight calls. And if you're below, you could probably take puts, depending on how the candlesticks look. Here's let me turn off the volume profile again. Here's a perfect reversal, right? Tweezer bottom. So you guys want to be looking for those things. You still want to use your TA for, what you know. Trying to see if you guys have any more questions. Hopefully I answered everything. Probably not going to be one of my better classes. I'm sorry. I am dead. I only got 4 hours of sleep in like the last 36 hours. Swing stuff. Again, cyber. So this is something I have to test, but on the 15-minute time frame. So like, actually, here's a good example, right? Let me zoom in on this area here. No, not every day is a virgin point of control. Well, I guess, yeah, every day, new day would be a virgin point of control because nothing has crossed over it yet. Yeah. So this is a perfect example of what I was talking about. But again, I haven't back tested this, and you're going to want to use, your confluence points. But so we have a supply zone here, right? We're on the 15-minute. We cross through our VPOC. We cross through our trend line. And here we're outside of our supply zone at the end of the day on the 15-minute candle. So here, going into the end of the trading day, you could take puts. Obviously, you want to see more confluence points. Like if this was also below our VWAP cloud, it would just be one more confluence point. You would want to look at the volume. I don't have the volume up on the screen right now, but if we took puts here, at the end of the day, even if you got it at the close, like you're good. So again, that's going to need a little bit of back testing, but this is the theory that I have, outside of above or below a supply zone, 15-minute candles, multiple confluence points, you can use for swings. I wonder if, did you guys catch any of those trades today? I need to go through and start charting stuff, but this was Facebook today. Yeah, I said take calls above 311. Broke through the weekly pivot. Okay, Rick. So every supply and demand zone is going to act as support and or resistance. So here you can see, and again, not going to be perfect, but here you can see we're having trouble breaking through this supply zone, right? Boom, 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 boom. Finally break through. You could make some money on puts here. I don't know the exact, 303 to 299. And then here you can see we keep rejecting off of it. And then when we finally break through it, you can make money on calls. This was the play today. I said over 311, take calls on Facebook, and you would have printed. This is 1, 2, 2 trims, 3 trims. Would have been a great trade. Does that make sense, Rick? And then areas like, and again, you have to think about the psychology. So not just retail investors, but if people bought here, retail, or if people are selling here. So if you bought here and you see downside and it finally comes back up to here, a lot of people are happy to get out break even. But not only that, what do you think drove the price from here way down here? We probably have big sellers in these areas that have, orders put in, limit orders, like large quantity limit orders. And so every time it comes up and touches this area, their sales hit, and then it goes down, and then it comes up, and their sales hit, and it goes down. And then so the next time it comes up here, those limit orders are still going to be in place. Same thing, here, there could be hedge funds or whatever that place limit orders to buy in this supply zone. And so when it came down and touched, we had a lot of buying. Boom, boom, boom. Upside. Oh, awesome, Cyber. So you have to look at the overall picture, like what's happening. There's, all of these, it's telling a story, and you just have to learn how to read the story. A lot of selling and buying happening here. And that selling, like if you, let's just pretend, let's say you placed a sell order for 1 million shares here, and 250,000 of those sold, and then it breaks below, but you still have that limit order, boom, 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 comes back up, limit order triggers again, you sell more, goes back down, comes back up, limit order hits again, you sell all of your 1 million shares. Obviously, none of us are buying 1 million shares of Facebook, but if you think about what's happening, not just between retail investors, but also hedge funds, there are millions of shares being sold in these areas. There are millions of shares. There's less shares being bought, which is why we're seeing downside. But in all of these areas, you have buying and selling taking place. And again, people that bought here, mostly retail, when we come back to that level, they're going to happily get out break even and move on to trade a different day, trade a different stock. So that's how you have to look at it. That's how you have to think about it. Use your technical analysis. Plot your supply and demand zones without candlesticks so that you're not, you're not biased. Like most people would want to move the demand zone way up here, where most of the selling is taking place here. Most of the buying and selling is taking place in this red zone here, not way up here. Anything else, guys? I mean, if you guys want, we can always just switch over to Discord and discuss things there. Actually, let's do that really quick. I'm going to hop in the free chat in Discord. If you have questions, I'll see you guys over there. If not, I will see you guys tomorrow. All right. Have a good day.